Good morning. Welcome back to the Junius Maltby channel. Thank you for being here as we take another run through the headlines and generate some conversations based on what we're observing around us in the global economy. We'll get right to it. We'll take a quick look at the charts this morning, see where things are. As most of you who are aware and obviously connected somehow to the internet, you've likely seen this morning's prices. So gold's taken a little bit of a dip. Same with the US dollar, which that is pretty interesting if you think about it, the two of them kind of paralleling together. As we've often mentioned in the past, and most of you are aware, it's quite historical and accepted that when the dollar goes up, gold will go down. If the dollar goes down, then gold will go up. We're seeing the two of them linked almost together a lot lately. So there you have it, gold dipping along with the US dollar. Silver dipped, came back up a cent as you can see there, but still it's down for the morning. Oil, pardon the blurry image there, but you can make out what it is obviously. Oil came back fairly strong this week. It's back up above $50 a barrel. It's up 3.5% this morning alone. But don't get too comfortable with that. You know, I was surprised this morning actually driving through town. I saw some gasoline prices at $1.88 on some signs. So that's quite low. And as you can see, Saudi Prince Al Walid is saying that there's a good chance oil will not be above $100 a barrel again. I am no oil expert by any means, but I will maybe take his word for it, being that it is their entire livelihood and quite the reason for their wealth to begin with. So if they're placing bets that oil's not going to be above 100 and it's not coming back for a long time, according to BP's CEO, well, that may very well be the case. So that's something to consider and to look at. Now, that's really good for gold miners, for sure. You know, as we all know, it takes a lot of diesel fuel to extract gold from the earth. I can never remember the exact amount on average per ounce, but I know that it's quite significant. You don't have to quote me on this, but just use it as a rough guesstimate estimate. I remember in the past hearing at some point that it was somewhere in the vicinity of like $500 to $700 worth of diesel. So I don't know what that amount, what the price of diesel was at that time that I heard that quote. But just imagine if it takes about $500 worth of diesel to extract and finally refine and deliver a full ounce of gold per ounce. That's quite a lot. You know, I've heard other things, quotes, and I'm sure diesel ties into it, that the extraction cost for an ounce of gold is anywhere from $800 to $1,000, depending on where it's being mined, what's going on. So if it's $700 to $800 an ounce just to mine it, a major portion of that is oil costs. So if oil costs are down, therefore it should be cheaper to mine gold. And with gold being traded at current prices, the profit margin for those miners, those mining stocks, junior miners, and those people who make their living off of mining gold, they should be doing a little bit better than they were in the past. And as you can see here, gold's relationship with oil decoupled. Interest rates key. Here, this is an interesting article. We'll just read through these rather than me try to interpret them for you, but we'll just read it here. Gold has decoupled its century-old relationship with oil and is now being driven by interest rates and currencies, according to Bank of America Merrill Lynch Tuesday. Moreover, we think that a unique combination of factors is again making gold attractive in investor portfolios. Negative nominal interest rates, a closing volatility gap to other asset classes, and improving weekly returns. After all, unlike government bonds or fiat currency, gold is no one's liability, said Bank of America Merrill Lynch analyst Michael Widmer. Gold has been performing well so far in 2015, as all of you know. The price surged by more than 10% in January alone, breaking through $1,300 an ounce as investors sought a safe haven. And I think you and I, the Junius Maltby channel, as a group and a community, have somewhat of an understanding of why this is happening. We've discussed it. And let's just pull up the next headline and kind of use it as a segue into what we're going to talk about. Bullard warns of asset bubble risk if Fed keeps rates too low. So we just read in the last article, rates are low, people are buying gold because of that. Well, what do low rates do? Any of you who are familiar with the Austrian School of Economics and some of the ideals that we believe here, we're all aware that low rates equal risky investment behavior, gambling type behavior, and well, the hangover from that is not very good. Typically they blow bubbles and then those bubbles pop. Well, here we go. We're getting warnings again. Fed keeping rates low, bubbles being created. And then we see this. Currency wars heating up as central banks race to cut rates. Again, rates are being cut, not only just in America, but globally. And it's all tying into this currency war that we see taking place, right? We've talked about that on the channel numerous times in the past, and it's just now getting some mainstream attention. No credit to myself. I was hearing the currency wars information from those such as Jim Rickards and Max Kaiser and Peter Schiff, Jim Rogers. There's a lot of guys that have been mentioning currency wars for several years now, and it's just now hitting the mainstream financial news. Here's some headlines, clips. You can take a look at them. Obviously, currency wars hitting the presses, full swing. It's happening. It's undeniable. Currency wars, as Professor Fouquet has told us in the past, lead to trade wars. Trade wars lead to shooting wars. I believe I've mentioned on here my belief that the war and the civil war taking place in the Ukraine is quite possibly tied to some trade war between the East, the West, Russia, the EU over those. Anyways, long story. Currency war, trade war, it's happening. Bloomberg, U.S. central bankers risk inflating another asset price bubble if they keep interest rates too low as unemployment falls, said St. Louis Fed President James Bullard. Bullard said the die is already cast for the jobless rate to drop below the Federal Open Market Committee's estimate for full employment of 5.2% to 5.5%, regardless whether the Fed raises rates. Gold gets central bank boost. Again, why is that? Well, globally, central banks are aggressively pursuing inflationary monetary policies while weakening their currency to promote more economic growth, and one European fund manager sees, or said he sees, this as the perfect environment for gold. With central banks all over the globe, especially in Europe, being eager to fight deflation and to do whatever it takes to create inflation, I think gold is in a sweet spot, said Ronald Peter Stoffler, fund manager at Incrementum AG and author of the In Gold We Trust report. Again, you can kind of see there's a theme here, kind of a mantra. Gold is going up amidst this battle, the currency war. Well, let's take a look at what's going on in the East, some other things, some other information. Commodity shipping measure falls to 28-year low on China demand. There's an article out, and I was reading some of it, that it mentions the Baltic Dry Index. As you guys know, the shipping of a lot of the goods, and a lot of that's tied to China. Well, China apparently is slowing down in it regarding its consumption of products that aren't produced there, except for gold. They still consume that, but China's slowing down a little bit. It says here that the Baltic Dry Index plunged 5.1% to 632 points, the lowest since August 22nd, 1986. This was hard for me to believe. I couldn't believe that it was lower than the Baltic Dry Index back in like 2008 and 9 and 10. According to data from the Baltic Exchange in London on Thursday, freight rates for all the vessel types within the measure declined. So shipping is slowing down. But like we said, China still buying gold. And the gold withdrawals are already 202 tons, and this is over there domestically. As we all know, the Chinese New Year's coming up, so there's a lot of gold gifting, which would explain some of the physical demand and people pulling gold out to give to others. But a lot of gold moving in China, as well as many believe there's been this was the most interesting part of this article. I'm going to read it to you. Many believe there has been a concerted program to suppress the gold price through paper gold manipulation on COMEX. Some also believe that China is happy with this, given that it has enabled gold purchases at a level which it considers cheap in the long term. This is accompanied by the suggestion that China has been surreptitiously using its vast foreign currency-related holdings, estimated at over $3 trillion, to quietly build its own gold reserves with the aim of surpassing the U.S.'s reported 8,133.5 tons, as reported to the IMF, and may only disclose its true gold holding when it has reached or breached this level. So many believe that China is trying to surpass the U.S. in gold ownership. Wouldn't surprise me in the least if they've already done so. I believe they're very close, and they're continuing to buy gold. As you see, here's another headline from today: China draining global gold inventory. They're buying a lot of it, and they're buying it from everybody. The Brits, the U.S., everyone's shipping them their gold. Netherlands. China continues to drain the global gold inventory. If you want more information on that, I would encourage you guys to go look at it. The Bullion Star website has a lot of it. Where's all this gold coming from? Well, as you know, GATA, the Gold Antitrust Action Committee, they do a lot of the detective work and investigative work to help find out the mysteries surrounding gold and exposing a lot of the global misinformation and well, we could call them lies regarding gold and supply and where it is and who has what. We'll close on this chart. China's economy surpasses the U.S. based on purchasing power parity. Yeah, there you go. That's a source was the International Monetary Fund, U.S. Global Investors. Looks like China has surpassed the U.S. in its purchasing power parity. Take it for what it's worth. It hasn't done so in my lifetime, so this is a big first, big sea change. Again, I believe it was Professor Fouquet that wrote in an article several years ago, I think I read it in 08 or 09, that we were entering a sea change. The world was going to be forever different. We were in uncharted waters. A new era was upon us globally, economically. And it's interesting. It's exciting to be on the ship and sailing through these uncharted waters, because who knows what we are going to encounter or see. There's going to be some interesting events, definitely. So buckle up, keep stacking, be encouraged, know you're doing the right thing if you're stacking gold, and welcome to the Junius Malpe Project, the Junius Malpe channel. If this is your first time here, appreciate it. Don't forget to like. That's clicking the little thumb up below. That lets people in your little circles know that, hey, this is something you should probably check out. Don't forget to share the videos if you feel like you should do so, or you want to show it to friends or others you might think are interested in the topics we talk about here. So go ahead and paste the link into your Facebook page, your Twitter account, or wherever, what have you. So spread the word, share the Junius Malpe channel so we can get more people on here talking about it. We have a little celebration here. We just surpassed 3,000 subscribers, which is amazing. Really, if you had asked me when I first set up this channel and first started talking about these things with you guys, if you'd said, hey, what do you think you'll reach as far as people subscribing? I didn't really know what subscribers were when I first started, but when I first found out about it, I would have guessed maybe 300 or 200, somewhere in that range, 100, maybe 50 that actually subscribe and then would actually come back and watch videos with us. So to see the number 3,000 up there is very humbling. I appreciate it. You guys are awesome. The support you guys show here and the contributions, just the topics that you guys help bring up, and the balance of conversations and different views is awesome. So I appreciate it. You guys make this channel what it is. The only reason I keep it going, the only reason I have the energy to continue putting little videos together and doing the research and basically coming up with the energy to have this conversation is because you guys motivate the heck out of me. So appreciate it. Thank you all for being here. And there you go. We're going to close out today. Junius Malpe signing out. Keep stacking. See you guys next time if I'm still around. Or unless I get kidnapped by, you know, the bad guys, as many of you thought had happened to me in the past. No, I'm here, I'm healthy, and I have not been kidnapped. Over and out.